What's up, everyone? It's Karthik with Moneyvest. Welcome on board for our market open live stream on this Thursday, as we are seeing some selling pressure across the board for quite a few companies, actually. So Meta is down over 10% right now, trading down to $675 per share here. So down quite a bit, $76 per share. It's down. Chipotle is down over 18%. Nvidia also seeing some aggressive selling pressure here, down about 1.5% here, trading down to $204, but of course still sitting at above $200 a share, with the all-time high sitting at just over $212 per share as well. Volatility is down 2.6%, trading just over 16. Bitcoin and Ether also dropping. If the audio and the video is good, just give me a thumbs up and we should be all good to go here. Again, just let me know if the audio and the video is working well. Pre-market, as I said, we are seeing some pain in this market. QQQs are down about 0.5%, and S&P 500 is also down about 40 basis points pre-market as well. So, good morning, everybody. Thank you so much for joining. I'm going to miss being off and turning in the middle of working hours. Back to the rat race next week is what Andrew says. Perfect. Audio and video is good. Trump and China meeting, Xi Jinping's meeting has concluded. China has essentially delayed the export curbs on the rare earth metals by a whole year. So Beijing agreed to pause the introduction of the further export controls on rare earth for 1 year, following President Donald Trump's meeting with China's Xi Jinping. And also, rare earth are vital components to vast array of modern technologies, and also we're seeing China buying soybean from the US as well. So we're seeing a nice little pump in some rare earth stocks. If you come over to the materials watch list, we are seeing a nice little pump here. MP Materials up over 4.7%. We've got Next Gen Energy up over 1.5% yesterday, up another 1.5% pre-market right now. You got Energy Fuels up over 3.4 to 3.5%. TMQ is up over 4%. Then coming over to Alcoa Corporation, slightly down pre-market, but then USA Rare Earth is up almost 6% pre-market as well, as we're seeing some nice momentum in those names, as technology is indeed bleeding a little bit right now pre-market. So again, good morning, everybody. Thanks for joining. If you have any questions about any specific stocks, I'm more than happy to go over. Yesterday's FOMC meeting concluded. We did get the 25 basis point rate cut. The markets were hitting brand new all-time highs. Again, Google was up 2.5%, sitting at all-time highs. A lot of individual stocks, including the likes of Nvidia, Google, Advanced Micro Devices. We got Amazon, Tesla, all of them pushing higher. And pre-market right now, of course, we're seeing a bit of a decline in this market, especially for Meta, right? I mean, take a look at this stock here. Absolutely getting crushed on the 15-minute, 30-minute time frames, and continues to sell off here, and now sitting at 670s for Meta, down about 10%. Continues to bleed further here. And of course, Google is exactly the opposite, sitting at almost $300 a share, up over 7.7%. So very strong momentum coming in for Google. Microsoft also did report their earnings. It is down over 2.3%. So if you combine Microsoft with Meta, on a net basis, markets are indeed rolling over. And of course, when you combine Tesla down 1.5%, and then Nvidia also selling off over almost 2%, you've got yourself a market that is ready to sell off right at the open here. So what's up with Roblox? Earnings and forecast was good. That's the beautiful thing about the market, is earnings, forecast, guidance, everything can be top notch. But, if there's something that Wall Street doesn't like, that can really put a dampen on the actual price after the earnings. But in Roblox's case, I mean, we did get an earnings beat, but revenue was a huge miss. We're talking $400 million worth of miss, $1.36 billion of revenue reported versus expected $1.7 billion. And of course, resistance right now is going to stay put at $141, $142, with a little bit of a support down here at $121 for Roblox. And that's exactly where that next support is going to be. Right now, it's down about 6.5% pre-market. So CMG, is it a hold or a sell? I bought at 42.50 after the earnings. It goes to south here. Not sure whether to add more for dollar cost averaging or let it go and buy Meta from that money. So Chipotle, we know that it was one of the biggest positions for Bill Ackman. If you come over here, our elite investors, right about there, and then you come over to Bill Ackman's Pershing Square, you can look at any specific stock, right? Whatever stock you want to look at, you can look at the holdings, right? That's also part of the analysis in the elite investors. And if you come over to history, and let's just go over and search Chipotle Mexican Grill, CMG, you'll notice that, of course, he's been a big seller of this stock over the last couple of quarters. If you look at the last 5 years, he's been selling more than buying. His last purchase was back in May 2024. And since then, he's just been aggressively selling that stock. And allocation-wise, it has been, of course, coming down. I mean, at one point, this was a 20% position for for Pershing Square. And that number is now sitting at 9.1%. So, yes, we have seen a pretty significant decline in the holdings for Chipotle in this portfolio. And Chipotle has been one of the larger positions in his portfolio for a very long time. Uber Technologies was a new purchase, and any kind of 13F filings that we get, this thing gets updated very quickly, right? So you can take a look at and track everybody's portfolio here, some of the elite investors, and see what they're actually buying and selling. Kathy Wood's entire portfolio is going to be here. There are trades, there are allocations for all the different stocks. So you can come over, take a look, Shopify, Robinhood, Block, Roku, SoFi, all the different stocks that she's buying and or selling. So when it comes to Chipotle, I would say that it is a company that it seems to be growing revenues. Profitability is quite decent, but it's still, for me, there's better opportunities out there, I would say. So I would put down a very strong support around $25, $26. And so if you continue to see some selling pressure, those are going to be some levels to watch for Chipotle. And right now we're kind of in a no man's land here because we're gapping down heavily for this stock. So resistance now is going to stay all the way up to $35 to $38 per share. If you come over to the valuation, we're looking at 35 times earnings, which obviously is going to get a 20% haircut today. 4.7 times sales is also going to come down. So I think the valuation has now come down to something more realistic and reasonable for Chipotle. Revenue is expected to grow, earnings expected to grow over the next 3 to 4 years. So it's not a stock that I'm going to completely rule out, but valuation was a big concern when it was sitting, at all-time highs of well over $69, $70. It was sitting at over 70 to 80 times earnings, right? So that was a huge concern, and now we're down over 53% from those levels for Chipotle. So yeah, it's hard to kind of make that decision whether you need to be holding or selling. It really comes down to what your conviction level is on that stock. But I did pick up Meta yesterday a little bit, and I'm going to continue to buy more if it continues to sell off, especially right now in the 670s. I think it does represent a pretty good opportunity dollar cost average, as it is now going to be sitting inside. In fact, trading below this area of demand right there, that area of support that we have for Meta. So that's where we are. Good morning, Jack. Very happy to see you. Let's see. Nebius, Robinhood, $200 NVIDIA call bought on August 8th, expiring in the middle of December, has finally rallied and is up about 85 basis points. Should I sell or hold? I would say take the profits, man. I mean, with any kind of options that you are buying, if you're up like 80%, 90, 100% or more, I think it makes sense. You wanna lock in that profit and take the money. So 85% is pretty solid. I would take the profit as well. As Tempelov says, take the dollars. So let's take a look at Robinhood and Nebius very quickly. So Robinhood is also consolidating sideways, down about 2.2%. Resistance sitting all the way up to 153. Now, how many people actually believe that November is going to be red? I'm really, really curious to kind of understand, like, what is the percentage of people that believe or expect November, one of the best months, historically speaking, based on seasonality, to actually be red for the market, because we've got today and tomorrow. We're going to wrap up October. Unless, of course, something dramatic happens, we are still on track to closing October very strong at over 3%. And this would be 6 months in a row. The markets are going to be green. And since April lows, S&P 500 is, I believe, up over 40%, if not 50%. So coming over to the April lows from 4,800, it is up over 43%. So this has been a monstrous rally for the market on the back of some very strong catalyst and tailwinds, and partly because of rate cuts, trade news, and just investor sentiment has gotten better and better, and a lot of euphoria and greed. But what's also interesting is that September, which was supposed to historically be one of the worst months, which it is, statistically speaking, was a very good month, 3.5%. October also, 3% so far. So I'm like thinking, okay, what everybody's expecting obviously is not happening. And so if everyone's expecting November to be a very strong month, which historically it has the highest win percentage of 76%, what if, after this insane rally of 6 straight months green, we get November and December to be red? So I'm kind of curious how many people of the 255 that we have watching believe that November is actually going to be a red month, November or December. So yeah, tax loss harvesting, that's another reason as to why we could see end of the year sell off. But everybody, is profitable. I mean, what kind of losses are people going to be harvesting in the first place? I feel like everybody's sitting on green portfolios and profitable trades. If anything, they're going to be pushing this sale into January to not pay taxes in 2025 for those gains. So January could be a month where people kind of take a lot of the profit and of course sell to kind of avoid that capital gains tax in 2025 and potentially push it to 2026. But yeah, tax loss harvesting, I mean, for losses, I mean, there's not really much losses that people are sitting on, right? So yeah, we should do a poll. Temple says, now November will be green, but not deep green. December turns red. So party's still going here. It's so weird. Who is still buying at these prices? Just keep scrolling, is asking. Green overall for November. November and early December has always been red flat month for me, but that's just my bad trade decisions. So yeah, I guess we'll find out in about 30 days. We'll be having that conversation again to how the markets are doing in the month of November. And yeah, part of me is like somewhat skeptical and trying to understand, obviously what other catalysts do we really have going on, because there's no FOMC meeting. Economic data is delayed. Earnings season is going to be wrapping up. So, it's going to be quite interesting to see how November turns out to be, November and December, and how we finish the year, because S&P 500 year to date is up a nice 16, almost 17%. So 17% gains for the S&P 500 after 2023 being a very strong year, 2024 being a very strong year, and now we've got 2025 also being a very strong year. So 3 years in a row, it's going to be very strong for the market. Granted that we do close nice and high for the S&P 500. Okay, so coming over to Nebius Group, sitting at 2.6% gains yesterday, down about 3.6% today. Support level is going to stay put right here. Call it all the way down to as low as $87, $88. We got a little bit of a gap there for Nebius, and we've got another support level to watch at $62, $63. And of course, a resistance all the way up here at 141 for Nebius as well. Any relevant news from the Trump and Xi meeting that you can share with us? I think I did watch a lot of videos of the entire meeting. Xi Jinping did mention that U.S. and China should be friends and partners and not trade enemies, and also mentioned that sometimes, obviously, we don't see eye to eye, but we both want what's best for our countries, and as a result, obviously, they are delaying the export controls on rare earth metals by 1 full year. They've also pledged to buy soybeans. Trump has also reduced the tariffs on China, which overall is very good news for the market and something that was already expected. And I feel like a lot of the things that have come out over the last couple of days is something the market had already priced in, and we already kind of knew about this. We knew that US and China deals are going to get struck. It's just never possible to have that high tariff rate and export controls sustainable over the long term. So eventually they are going to work something out. And we also knew about the The rate cut, right? 25 basis point rate cut is what the Federal Reserve gave us, and that's what the market were pricing in. We did see a little bit of a sell-off when Jerome Powell was talking because of the uncertainty around December. But all in all, I think the markets are getting exactly what we've been discussing and expecting from the market. So I think Tom Lee said we are still in the early stages of a bull run because AI and S&P could reach 7,000 and 15,000 by 2030. Yeah, I mean, statistically, it always pays to be bullish. So I would even go as far to say the S&P 500 is going to keep going, is going to go up forever. But the bottom line is that if you are always bullish, then yeah, you're going to be right 72% of the times, and you're going to get crushed on the other 28% of the times when the markets are indeed lower. And that's been the case. That's why we have to be very objective. We don't have to take one perspective and kind of make it our analysis, because we've got two different kinds of investors, right? You got the Michael Burry, who's always bearish, shorting, taking advantage of when markets get to extreme euphoria and then sell off. What's the success rate? 28%. Pretty poor, because historically 28% of times markets actually go down in a year. But when you've got Tom Lee, almost always bullish, 72% of times markets have gone up. So yes, got a much better success rate. So you decide, right? You know the math, you know the statistics, you decide what side of the trade you want to be. Do you want to be somebody who's shorting and selling, or you want to be somebody who's buying and net long on the market? Because it doesn't take a genius to figure this out. I mean, this is not rocket science. Take a look at the growth of the U.S. equity markets over the last 100 plus years. This is since 1927. How much have the markets gone up since 1932? It is up a whopping 141,000%. Not including for dividends, right? So you're looking at substantial growth in the market over the last 100 years, right? Annualized comes out to 8 to 9%. Yes, many years we're going to see those bear markets. Many years we're going to see this massive corrections and bear markets and sell-offs along the way. But then the question is, can you weather through this and keep investing, stay disciplined, have a strategy, stay consistent? That's really what it comes down to. And I've also done a video going over what is going to keep the strength of the U.S. markets over the long term, because, again, we cannot be blinded by historical data. Just because the markets have performed well over the last 100 years, does that mean that we're going to see similar returns over the next 100 years? No, it's going to be very different. And as investors, we have to keep adapting and be on the pulse, completely dialed in, understanding where the tides are shifting, where liquidity is going, where the next best opportunities are. And all of that comes from an understanding of macros, individual companies or macros and micros, what's going on a country level, but then what's going on within the country, in the private sector, with companies. Are they the market leaders? Are they the ones that are actually dominating? And you look at Magnificent Seven. I mean, there's no other set of companies like the Magnificent Seven in complete and utter domination and market leadership. And that's where liquidity is coming to. So, also goes to show that over the last 7 years, we've seen tremendous growth in Magnificent Seven. I mean, go back to 2017. We didn't even have one company that was worth $1 trillion, right? So not even a single company worth $1 trillion in the S&P 500. And now how many do we have? So if you come over to Market Snapshot, concentration, actually, we're going to come over to constituents and market cap, right? This is sorted by market cap right here. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 companies that are now worth at least $1 trillion, not to mention NVIDIA, Microsoft, Apple combined are worth about 12 to 13 trillion. 13 trillion right now. Okay? Insane. Absolutely wild. And then Google, 3.3 trillion. Amazon, 2.5 trillion. Meta, just almost 2 trillion. Broadcom, wow. What? I thought Broadcom was closer to 1 trillion. It's almost at 2 trillion now? That's insane. Just double check this on TradingView. Yeah, 1.8 trillion. I thought it was closer to 1.1, 1.2. Wow. Broadcom coming out of nowhere. 1.8 trillion. Tesla, 1.5 trillion. And then Berkshire Hathaway, of course, also $1 trillion company. So, that's the crazy part. Gary, have you missed out on Broadcom? Not really. I mean, it's been part of the shopping list for such a long time. If you come over to the shopping list right here, You scroll down a little bit. Broadcom's been part of it for more than a year. It's been there. We've got what, $183 as the fair value, but then the light buy is around 215, and then of course heavy buy 200. And where was Broadcom during the April dip? Where were we? We were at 140. So we were at 140, and this was part of the shopping list. Even back then, I released a shopping list right around March. March is when the shopping list came out. So right around here, this is when the shopping list came out, and these were the prices. Light buy 215, heavy buy 200, no-brainer buy 150. And where were we? We were at 144, 167, 170. So these were all those opportunities for Broadcom. So all of that was part of it in the shopping list. That's why I highly recommend everybody spend time going over the shopping list, because these are stocks I've analyzed. I've spent, weeks studying every business, understanding their moats, understanding what makes them so special, and is the moat defensible, and then going with the most conservative analysis that, okay, if the analysts are pricing in a 30% growth rate for next 5 years, I'm going to go at 20%, or I'm going to go at 22%. So it's already pricing in for a downward revision that may happen in the future. And then also plugging in a 10% margin of safety on top of a lower PE multiple than where it's trading right now. And then you arrive at these super conservative, super risk-adjusted values for this stock. And then, of course, a lot of people will say, oh, they're never going to get hit. We're never going to see those prices. But in a bear market, in a correction, we always see them. We always see them. And that's why the people who are prepared are going to get opportunities like these, right? Broadcom's up like 184%. Come over to Robinhood, I can find Robinhood on this list here. Scroll down a little bit. There we go. That's Robinhood right there. We had light buy at 43, heavy buy at 34, light buy at 50, heavy buy at 43, and then no-brainer at 34. And then, of course, we were sitting at around $32, $33 back in April. And since then, this has been the best performing stock, up 400%. So yeah, I like using both your shopping list and hot list, and use my options play that are integrated with Fidelity for some CSPs, as well as your tips. That's perfect. It's a great way to do it. And that's really what it is, right? It's more so about conditioning. I was just speaking with one of our members, long-standing members of 4 years, literally this afternoon. And originally when he and I first got started, I kid you not, there was struggle, no plan, no strategy. But then today, just seeing him so happy with where the markets are, making all the right decisions, sitting at all-time highs and up so much, just really makes me very, very happy, right? And that's really what it's all about. It's conditioning your brain to always remember that red is good. There's deals out there when the markets are selling off. So as long as you have a plan in place and you can take advantage of those opportunities, you've got the cash ready, you're going to be fine, on the long term on that recovery. But it really starts with preparation, having a plan, doing your homework, and then just being ready for it to execute. So, Andrew, crazy how fast you move through your slides and tabs while sharing top mind information. You know your stuff for sure. Thank you. I appreciate that a lot. I have a lot of spreadsheets, by the way, that I can go over. We have done a lot of analysis on the markets over the years, and we put a lot of that over on our dashboard. So on the dashboard, you can pretty much see a bird's eye view of where the markets are. So it's going to give you the Moneyvest index, market breadth, market momentum, market streaks. So all the data points are going to be present right here, giving you a full bird's eye view of how this market is doing. So obviously, market concentration's gotten a little out of hand, and in the future, once you start to click on these metrics, you can get a full historical analysis on how this number has changed over the years. Similar to what we have for the Moneyvest index. So if you click on it, for the S&P 500, for the NASDAQ, you can get this nice little dial over here at the top, and then also this chart that shows you, where we are currently. So obviously 3.45 in neutral as of October 29th. But then, where were we back in April? Of course, 1.83 in panic. And it will also give you the NASDAQ 100's Moneyvest index. So obviously it actually dipped down to panic at 1.8, then a very strong recovery. And right now we're still in optimism right now for this number. So, and then you can look at the tabular form, kind of going over all these data points, where was the minimum, maximum, median for that particular year. So to give you an example, 2025, what do we have? We've got the median at 3.5, max of 4.11, so 411. and a minimum 1.8. So 1.8 obviously during the April panic, and 4.11 we might have hit July 3rd. Greed, 4.11 on July 3rd. What were the markets doing on July 3rd here? Let's take a quick look. June, July 3rd, right about there. Yeah. So we pulled back a little bit. We continued to push higher, got up to 574. And then, of course, there was a 4% dip, then another 4% dip, then a big red candle a couple Fridays ago. And then since, we've just been hitting new all-time highs. Are you buying more Meta? Yes. So I will be picking up a little bit more. Just depending on how it trades today, it seems to be a bit of a falling knife right now. So if we come over to Meta Platforms, looking at the fundamentals, no, the money, actually, you know what? It was the bear market analysis right there. So we're still working through this. Obviously, it's not fully completed. But what this chart actually shows you is all the historical bear markets for a specific stock. So it shows you the starting date, ending date, peak decline from top to bottom, and the recovery that it took, number of days spent in that bear market. So right now we're not that far off from all-time highs, obviously. So if you come over to Meta Platforms, from all-time highs, it is officially down 15%. So we're in a bit of a correction. We're not in a bear market yet, but correction is still 15% is pretty reasonable, for a company that's worth 1.5, almost $2 trillion. So, yeah, I'll be picking up more shares. I think it's trading at a pretty attractive valuation altogether. Of course, they did have a one-time tax write-off resulting in a huge decline, 87% effective tax rate. But then if you exclude for that, they had pretty strong earnings as well as margins and growth for the business on a year-over-year basis. So, yeah, so Meta is going to be on my watch list. Dilip, thank you so much. You're a long-standing member as well. I really appreciate that. Walter, I think it's an idiotic this dump. Of course, it's bad to have $16 billion to pay in tax, but it's Meta, and the growth ahead and profitability of the company is crazy. I agree. I think with artificial intelligence, they are also entering in this new era of social networking, connecting the world and all the different projects that they have going on. And so this definitely does make the valuation very attractive for Meta for the long term. So that's what we have right now. And yeah, coming back over to the market, Bitcoin is struggling. It's back at 108, 109,000. And as a result, BITX is down almost 4%, back at $47, $48. BMNR back at $48, $47 per share as well. Selling off over 2% pre-market. And then you got Ether also down almost 2%. As Ethereum is trading now under $3,900 once again. So, yeah, I also like to make sure it's on the lower part of the Bollinger Band as well when you are selling puts. Yes, absolutely. Gary, yeah, Hood was double digits this year at one point. It was in the 30s and 40s earlier this year. Pretty crazy. Cadence Design Systems has also been part of the shopping list. Got confused. Yeah, so Cadence Design Systems has also been part of the shopping list for quite some time now. Very strong company. I believe incredible revenues and profitability, and it just keeps on growing. And forward expectations are also very strong, right? From $6 to almost $10, over 60% growth over the next 3 to 4 years expected. Revenue 4.6 to as much as over 7.3 billion. Definitely worth putting on your watch list. From the financial crisis lows, it's up over 13,000%. So that's where we are. Mastercard and their today's report. Thanks and have a nice day. CSP $40 for BMNR looks like that is hitting. Yep, so it's going to be very close to the money right now at $40. So that's the consolidation. And 47 bucks is going to be that support level to watch. So coming over to Mastercard, earnings reported. EPS coming in at 438, beat. Revenue also beat, 8.6 billion. Been consolidating sideways. I think a lot of payment processing companies have been moving sideways rather than anywhere. This is Visa, and you can clearly see a lot of consolidation sideways. Support level around 335, resistance up to as much as 358, 359. We got American Express, I think, in a similar pattern. A little bit different, very different, trading at very near all-time highs here. So American Express seems to be doing significantly better than Mastercard or Visa, which are mostly trading sideways. But this right here is the nice little uptrend for American Express here. Now coming back over to Mastercard, I would say keep a close eye at a support close to 549, 550. And a resistance all the way up to as much as 597, close to 600 bucks for Mastercard. If it does break down further, which there is a possibility that it does, there's going to be a couple more support levels to watch, all the way up to as much as 526 is going to be another level to keep in mind for Mastercard. Yeah, Chipotle taking a big 20% dip here. BMNR and Grab, I see it dipping. So BMNR next support 47. So that's going to be that level to watch, Joe. And then for Grab, I believe support level is going to be around 570. So that's going to be that support level. You could even lower that a little bit. 550 is going to be a decent support for Grab. Yeah, Meta grew revenues 26%. Very, very strong. And I am certainly looking at Meta from a buying perspective, from a dollar cost averaging perspective here, given the weakness that we're seeing in pre-market, down almost 10%, over 10% right now. And I mean, it's been a huge case study, right, with Meta platforms, because I believe, obviously when we were talking about it back in 2022, 2023, there was so much negative sentiment about the metaverse, and everybody thought that Meta is dead, Facebook is dead, nobody uses it anymore. It was down 77%, and then Meta just exploded on this recovery, 700% growth. And now, of course, Meta's the next big thing, or Facebook or Instagram with AI and WhatsApp. So I think sentiment also shifts in cycles a lot. JT, how do you deal with FOMO when market is at all-time highs? It's hard, I know, but I think it's really important to always look at the worst case scenario as well. As I always mention that, when you're looking at any kind of investment opportunity, it comes down to risk and reward. So the reason why risk always comes first in that phrase is because you need to evaluate the risk first. Risk and reward. And the risk can be in many different ways. It can be actually looked at from many different perspectives. But as long as you understand the risks, and if you're comfortable with that, and the reward actually makes sense emotionally, statistically, financially, then I guess go for it. But if it doesn't, if you feel like, okay, the risk reward really isn't that great, then regardless of what you're feeling, if you can't make sense on it in paper, or financials don't make sense, then yeah, emotions are always going to be there, right? They're always going to be there. First is always about the math. The math needs to check out. And then you can feel good about that deal through emotions. But never let emotions make the decision and, for the math to fail and the risk reward for it to not be great. So it's always about having a very strong hold on how good the risk reward is. If you can really get that dialed in and nail down on the entry, on the price, then it becomes a lot easier of a decision. So I remember when I had a choice between Google and Meta, I chose Google, D-Stripped said. But Google's also done really well. Obviously not at the same rate as Meta, but you've still made money. And I feel like that is one of the biggest dilemmas that investors face is, oh, I made profit, but I did not make enough profit. And we deal with that in our Discord and our community all the time when people sell calls and they're like, oh man, I'm in the money, and forgetting about the fact that, oh, if you just let that expire, you're going to collect the profit, which is the capital appreciation and the premium. So you are making money, but you're complaining about not making more. So kind of gives you perspective about how investor sentiment changes when market changes, when situations change, because we obviously tend to be more greedy when markets are ripping higher. So wear a shock collar when you're feeling FOMO to train yourself. Yeah, as soon as you try to go to the buy button, you get shocked. You get a little electric shock there as soon as you try to hit the buy button. So, all right, market's about to open in about a few minutes here. We got Google pushing to new all-time highs, just shy of $300. Nvidia is selling off a little bit. Meta is down aggressively as well, trading down to 673. We got Chipotle, QQQs, S&P 500, all of them rolling over a little bit on the day today. Volatility back in the 16s. And so, obviously we have a full chart showing you exactly where the VIX is and then what percentile it's going to be at. So anything under 17.8 is below the 50th percentile. So that's where we are. Anything under 14, and we are now in the 25th percentile. So anything below 10 is also cause for concern. Just so you remember, it's not always when the VIX is high, it's time to buy. It's also when the VIX is low, it's time to go, right? That's another part of our motto, the other side, because it's a bell curve, right? So what we're tracking is the extreme rare events. So we can't just be looking at the one extreme and then forget about the other, because days below 10, it's only spent 68. Can you imagine? In the last 33 years, the volatility has only spent 68 days below 10. That's less than 1% of the times. So as soon as we get down there, you better believe it. Something's about to happen in the market. And again, this is the VIX value corresponding to the implied move in the S&P 500, as we like to look at that as well. So 16 VIX, which is close to 17, is implying that over the next 1 month, S&P is going to move about 5%. 1 week, it's going to be 2.5. And on a daily basis, it's going to be moving around 1%. So 1% plus minus move in the S&P 500 at a VIX value of 14. Another thing that's really important to always remember about the volatility is that it is directional-less, right? There is no direction attached to volatility. It just because the volatility is going higher doesn't mean the markets are going to go down. That is not the case. VIX is just a measure of volatility in the S&P 500. It doesn't give you a directional bias, but in the past, the correlation has been negative 62%, meaning when the VIX goes up, S&P 500 goes down 62% of the times, and the other 30+% of the times, they both move in the same direction. And so that's also something to keep in mind, because it has been happening, right? I mean, S&P 500 yesterday was flat. NASDAQ yesterday was up 55 basis points, and we had, the S&P, the volatility go up. VIX was up, and VXN, which tracks the volatility on the NASDAQ 100, was also up 2%. So both the NASDAQ and the volatility was up on the same day. So Andrew, would you say business performance, investor sentiment, macro forces in respective order are a good way to separate business value from stock hype? So business performance, investor sentiment, and macro forces in that order, good way to separate business value from stock hype. I guess, yeah, I mean, if you really want to, segregate fundamentals with actual stock perception and hype, then really the company in itself is what really matters. But at the same time, if, a company has great fundamentals right now, but is not growing in the long term, right? So obviously that's a stock that you want to avoid. But Wall Street, as I've always mentioned, is always going to be very short-sighted, right? They're going to be short-term focused because they want to beat the S&P 500. And, if you do this analysis and you kind of do this study, of the stocks that are the best performing stocks in a given year, more often than not, those are companies that are reporting very strong growth on a year-over-year basis in that year, right? A lot of them. And we've gone through these cycles: Upstart, Enphase, NVIDIA, Palantir, SoFi, Tesla. I mean, there's been so many cycles where these companies reported incredible numbers on a year-over-year basis, and their stocks absolutely ripped higher. And then when things changed, when those growth rates moderated, that's when we saw those big sell-offs. Because if a stock has to move, institutional money, big money has to come in order to move that stock. Otherwise, it just doesn't move much. And I think that's what PayPal is lacking right now. PayPal doesn't have like a lot of institutional money that's moving it. And every time we do get it pushed higher, it just gets smacked down because there's a lot of profit takers, a lot of bag holders in that stock right now, unfortunately. So yeah, I mean, NVIDIA reporting great earnings, year-over-year growth, and we already know the performance. The stock's been on a complete tear this year in 2025. Yes, so BITX has been selling off a little bit on the back of Bitcoin. As expected, it's down another 4%, 47.40. $44 is going to be that support. I may pick up a few more shares today. Just $2 cost average into my position here. And all I'm going to say is just be very careful, because Bitcoin and Ether are a volatile bunch. They are going to be extremely volatile, and they have been over the last couple weeks and months. So just be mindful of that volatility in crypto. So there you have it, everyone. Thank you so much for joining. Market's about to open. I'm going to jump into our Discord, share some updates and alerts over there. Again, link's going to be down below if you're interested in joining us. There is an annual 30% discount available until the end of this month. So just a few more days left. If you want to upgrade also, there is a 30% annual discount. If you're going from monthly to annual, you can save 30% for the year as well. Available until October 31st. Any questions, email me at admin@moneyvest.com. Hope you all have a fantastic Thursday. We'll see you back at it tomorrow for the Market Open live stream. Happy investing. I'll see you all.